So today, we're going to tear into this really fascinating institutional strategy report from February 17th, 2026. If you just glance at the market, it seems almost boring. The Dow's up a little, the Nasdaq's down a little, but under the surface, something huge is brewing. And this image just nails it, right? On one side, you've got the old order, these crumbling pillars of how things used to work. And on the other, this chaotic, powerful new force of technology that's just ripping up the rulebook. Okay, let's dive right in. This single line from the report's summary just hits the nail on the head. It perfectly captures the trap the market is in right now. On one hand, you have economic data that is surprisingly strong, really robust. But on the other hand, the very institutions that are supposed to guarantee stability are, well, they're in crisis. So this isn't about whether the market goes up or down anymore. It's about the very foundation of the market being pulled in two different directions. So how do we even begin to unpack all this? Well, the report gives us a great roadmap by breaking it all down into these three core pillars. First up is the AI paradox, this thing that's creating fortunes and destroying industries all at once. Second, the institutional crisis, and we're talking specifically about the political heat on the Federal Reserve. And finally, the geopolitical variable, which is just layering risk and uncertainty on top of everything. This is how we're going to make sense of the chaos. Let's start with the biggest, most powerful force at play here, the AI paradox. And look, we're not just talking about a cool new piece of tech. The report frames AI as a force of creative destruction on a scale we really haven't seen in decades. It's creating this brutal, sharp divide between the new winners and the old losers. Now, what's so interesting is that the market is freaking out about AI for two totally opposite reasons. On one side, you have the fear that AI is just too expensive, that all these tech giants spending hundreds of billions on data centers and chips are going to wreck their profit margins. But the bigger, and I mean existential fear is on the other side, that AI is just too powerful. The real deep-seated anxiety isn't that AI won't make money, it's that it will destroy the old ways of making money way too fast. And wow, this slide shows you exactly what that destructive power looks like. The report calls it the SaaS apocalypse. Think about it. For years, software companies like Salesforce have made a fortune on a really simple model. They charge you per employee per seat. But what happens when an AI agent doesn't need a seat? It doesn't need a login. It just does the job. This is a huge threat that could turn all that high-margin software into a simple commodity, just invisible plumbing running in the background. And look, this isn't just some theory. It is happening right now. Take a look at this chart of the logistics sector. This is an industry that's basically built on middleman connecting truckers to shipments, a perfect target for AI. The moment a new super efficient AI logistics platform was announced, the stocks of the old school brokerage firms just fell off a cliff, down 15% almost instantly. The report calls this an algorithm shock. And it's a stark warning of how fast an entire business model can get vaporized. So, who actually wins in an environment like this? Well, the report is pretty clear. It's the companies that are providing the essential infrastructure, the ones selling the picks and shovels in this new AI gold rush. Palo Alto Networks is a perfect example. They're not selling a software product that can be easily replaced by an AI agent. No, they're selling the fundamental security platform that you need to run AI safely. And that's why their stock is just a picture of strong, steady growth. All right, let's switch gears to our second pillar, and honestly, this one's even more dramatic. We're moving from the world of tech disruption to a full-blown institutional crisis. I'm talking about the crazy political pressure being put on the U.S. Federal Reserve, and it boils down to one critical question. What happens when the market's most important referee is no longer seen as being impartial? This timeline just lays out the whole escalating mess. It starts with simple political pressure, the administration pushing for lower interest rates. But then things get really serious with the Department of Justice investigation into the Fed chair himself. Now, officially, it's about renovation costs, but pretty much everyone sees it as a political hit job. And of course, all that external pressure starts to create cracks on the inside, with Fed officials openly fighting with the administration. This isn't just politics as usual, it's a direct assault on the central bank's independence. And that leads us to this really fundamental and frankly scary question. The report makes us stop and think about the ultimate stakes here. I mean, what happens if investors all around the world start to believe the Federal Reserve is just another political tool? What happens to their faith in the US dollar? Or their willingness to buy US stocks and bonds? The consequences here are just massive. Okay, so you've got this AI bomb going off on one side and a full-blown crisis at the Fed on the other. How are investors possibly reacting to this? Well, that brings us to our third pillar, a huge shift in money that the report is calling the Great Money Rotation. Because when faced with this much uncertainty, investors are doing what they always do. They're voting with their wallets, and their money is fleeing the virtual world and pouring into the real one. This Sankey diagram, it just lays it all out perfectly. You can literally see this river of money flowing away from the assets on the left, the high-flying software stocks, long-term bonds, all the stuff that's really sensitive to uncertainty. And where's it all going? It's flowing to the right, towards physical, real assets, stuff you can actually touch, infrastructure, energy, defense. It's a classic move towards safety and tangible value. And you can see this happening in real time, right here in the daily market data. This heat map shows that split screen in action. Just look at that sea of red in big tech and software. Salesforce is getting hammered, down almost 4%. But at the same time, look at the real asset sectors like financials and energy. They're green. This is exactly why the tech-heavy NASDAQ is falling while the more industrial Dow Jones is actually rising. It's a clear split driven by this rotation from the virtual to the physical. So that's the diagnosis, a market being pulled apart at the seams. So the big question is, what do you do about it? How do you actually navigate this mess? Well, this brings us to the strategic playbook, which gives us some really clear scenarios for how to act. The report gives us two very clear paths. It's an if this, then that kind of situation. The bullish case is all about the economic data. If we keep getting good news on inflation, the report says to lean into things like big financial stocks and energy companies. But the bearish case is triggered by politics. If the Fed chair actually gets indicted, or if we get a long government shutdown, the advice is simple: raise cash and buy some protection. But then there's the one thing nobody really wants to think about, the true black swan event that the market is just not priced for. And that is the sudden resignation or firing of the Federal Reserve chair. This wouldn't just be a market correction. The report warns this could spark a fundamental crisis of faith in the entire U.S. financial system. It could trigger a Sell America event where everything, stocks and the dollar, plummets together. All right, so let's pull all these threads together. We've got the AI paradox, the crisis at the Fed, this great money rotation. What's the final verdict? How do we find the actual signal in the middle of all this political and technological noise? The report's final call is neutral, but don't let that fool you into thinking it means do nothing. It's actually a diagnosis of a market that's in a perfect stalemate. You see, the fundamental signal, strong jobs, good growth, is incredibly positive, but the political noise, this huge uncertainty around the Fed, is powerfully negative. And right now, these two giant forces are perfectly balanced, creating this tense, sideways market we're stuck in. And this final image, man, it just says it all. The market is full of noise, that chaotic, jagged red line of politics, headlines, and fear. It's distracting, it's volatile. But the core message of this whole report is to try to ignore that noise and focus on the signal, that smooth, upward-trending golden line of actual corporate earnings and cash flow. Because at the end of the day, that's what really drives value over the long haul. And let's wrap up with this final piece of wisdom from the report because it's so important. It says the biggest mistake you can make isn't thinking this time is different. It's believing that politics can beat economics. Politics can create incredible chaos for sure, but over the long term, fundamentals usually win. The real lesson here is that the independence of our institutions isn't just some abstract political idea, it is the bedrock of our economy. And when that foundation gets shaky, capital is always the first to head for the exits. So the real question is, what signal are you paying attention to?